Scott, the Federal Reserve at this time announcing sweeping new rules to bar Federal Reserve officials from purchasing individual securities. This will apply to Fed officials, policymakers, and senior staff. It will prohibit the purchase of individual stocks and bonds, agency securities, or agency mortgage-backed securities, or entering into options, futures, and other derivative transactions. All of this comes in response to questions of conflicts of interest raised by large-scale individual transactions by Fed Presidents Robert Kaplan and Eric Rosengren, both of whom have since resigned. And it comes with some Fed officials, including the Fed chair, holding assets previously purchased that the Fed ended up buying in the year 2020 in response to the pandemic. The new rules: investments will be limited to mutual funds or similar, what they call collective investment vehicles. Officials will have to obtain prior approval for purchases and sales of securities up to 45 days ahead of time and hold investments for at least 1 year. No purchases or sales will be allowed during periods of what they call heightened financial market stress. Reserve Bank presidents now will be required to publicly disclose financial transactions within 30 days, as board members and senior staff currently do. Fed Chair Jay Powell, remarking on these in a press release, says these tough new rules raise the bar high in order to assure the public we serve that all of our senior officials maintain a single-minded focus on the public mission of the Federal Reserve. So, Scott, some pretty extreme action here by the Federal Reserve in response to some questions of conflict of interest, certainly the appearance of this in recent reports.